Hey everyone, this is Michael Bengiat. This is the Stock Picks weekend video for July 2nd, 2022. Hope you're all having a good 4th of July weekend. Well, let's go ahead and get started. We're going to review the current market environment, go through our lists, and we do have one position now in our portfolio. So we'll talk about that first. Here's our disclaimer. Go ahead and read it. Just briefly, it's just anything presented here is provided for educational, informational purposes only, and in no way should be considered investment advice. Okay, so right now our stock environment is still on yellow, and also the best trading strategy is still swing trading. We're not out of the woods. We of course are in a bear market, so any gains should be treated as it's probably better to take profits sooner than later. Once we are in a new bull market, we will switch that over to probably longer term trading. Because, especially if there's a nice wipeout and we got a new crop of leaders, not anything to do with the old crop of leaders, which are all broken. And, when you catch them at the beginning of a bull market and they're new leaders that haven't made massive moves already, that's the time you can make a ton of money really quickly. So we're still at about 10 to 15% exposure. We've now added one half position, so we're a little bit under that, but we're starting to get a little bit more interesting. We're getting, in the last few days, the leading stocks have been acting a little bit better, though a lot of them are defensive names that still reflect fears of recession. But we're starting to see more improvement. So it's still a small list because we're still seeing a lot of stocks that are doing this kind of thing. I showed this last week. They're just kind of ripped there. We have a more volatility, and then they come just flying straight up. Here's our buy zone. We would have normally liked to have bought something. It just went straight through it in one day. And I mean, it looks great. It's all high volume, all that, but there's nowhere to have bought this in a sort of a low risk area. Here's another one, same thing. Johnson & Johnson just came shooting up. So we're getting a lot of that in some names, especially the healthcare names. So we're watching a lot of these names, but we're not able to get them yet. So we don't buy into volatility like this. We want to buy into low volatility, and that's one of the things you constantly have seen me say. So, well, let's go ahead and just go straight into our list. So, 1 second. Okay, so let's start with Sovos. This is the company we just bought the stock, and they're a food and beverage company. And one of the things that we always look for is, first of all, this is an IPO. So actually this box here is covering it, but we started over here, IPO base. Typically what happens, you get a little run up and then you get the first base. Well, actually this is a first base, not an IPO, but we'll consider it an IPO because the stock's only been trading for, looks like 7-8 months. So it did have an IPO base. That one failed, which is very common. Then you get the real shakeout. It comes with the first base. Nice shakeout here on this day. Really dipped down to 9.5, came right back up over 10. That was the bottom. We don't trade those because you never know. It's just bottom fishing. Could have easily just kept going down. Nice, again, just came straight up this right side of the base, but then it came down and it's forming this handle, but it's a very deep handle. It's 24%. Our charts kind of give you that data. So that's a little bit of all stocks have pluses and minuses. In this case, this handle is too deep, but we're not just buying out of the handle. It came up and it formed a little consolidation pattern, and we bought it breaking out of that. So one thing I want to show you though too is, so we're not just buying it because it's coming out, and the top of the handle will actually be up here at 1636, and that's sort of the all-time high of the stock. But we're trying to buy it when it's over here. So let me go ahead and I'm going to draw a line across sort of this area here. Oops. Oh, sorry. Can't do it on this because this is, that's not let's see if I can do it this way. Okay. Well, sorry. It's a little sloppy line. But we had so we bought it on this day. It just came out, but it kind of just had a little tiny pullback right to the buy price. So, but one of the things that we like about that's actually a fantastic beginning to the move. And why would I say that? Is that first of all, whenever the stock has been up around here, 1580, it got a little higher over 16. it just meets sellers. It came up and sellers just pushed it all the way down. Came up, pushed it down. But we came up here and we didn't get pushed down. It was every opportunity for sellers to appear. So what this is telling us, also, we've been trading up here on low volume for the most part and one strong update, which is good. It means that the sellers have, it looks like they've been exhausted. And that's always what we're looking for. We're trying to buy into less volatility near old highs. And the fact that the sellers aren't just coming straight in and kicking it down shows that probably sellers have been exhausted and we now have a clear path for this to shoot higher. Now, it doesn't always work, of course. Nothing does in the stock market, but that's actually a great sign that we didn't really do anything, and we're still on low volume, but the sellers did not appear, so that's great. We also have this RS blue dot. We always look for that. First of all, the RS is 95, so it's outperforming all but it's in the top 5% of all stocks in the market, and showing that we're still in a base, but the RS is making a new high, and it's always very bullish to see that. So those are all the positives. We have a few negatives. This would have been better. Now what may happen here, which would be probably ideal, is the stock just kind of comes up near its old highs. So it gets above 16, does the same thing, just kind of forms another little handle that just the sellers, now we're at all-time highs area and the sellers are not appearing. And then if we get something like that, then it'd be nice that if it breaks out from there, we would probably add to our position. So we'll see. On the downside of this stock, the sales and earnings, sales are pretty good, but earnings have been a little erratic, negative, one positive. So, but again, it is an IPO and it's not, a long-established company. It's been trading. Annual earnings have been growing, not by tons, but not. And overall, it's got an 87 ranking. So, for the stocks that we're getting in this bear market, it's a pretty good pick. Has set up so we bought a half position. So we'll see where that goes. All right, let me switch to, let me see, how can I get rid of that thing? I never use these. Sorry, one second. I have to now get rid of that marking. I'm going to pause for a second and let me get rid of it. Okay. Okay, well, that took me a while to figure that one out. So anyways, we're back. So let's go ahead and look now at our growth stock ready list. Well, the first one on there is Sovos, so we're going to skip that. The next one is Ottertail, OTTR is the ticker. One second. Okay, so this is a utility service. It has some other diversified operations. So again, this one is a very strong RS line. It's come up. So this is on our ready list. We have the RS blue dot, another great sign. It has just come straight up into the buy zone. So we're still, it is buyable, but we don't like to buy it. It's already moved from the low 60s into the low 70s. Kind of really not giving much of anywhere to purchase it. So we don't want to buy into just a big move like that. Now, sometimes they just keep going and, you go, well, I missed that one. But more likely, we'd like to see it kind of calm down, as we always talk about, tighten up like we see over here. Tight trading, we always look for that. So we're going to just continue to watch this one, even though it is viable. Now, there are the earnings and sales on this have been really, really strong. 40s and 30s for sales. Earnings have been triple digits for 3 out of the 4 quarters. Growing margins. Something's going on with this company. The composite is very, very good. Composite's 99. Growth rate's 17%. Earnings have been rising, but for some reason there's a big drop in next year. So we have to sort of look into that. But that wouldn't stop us from buying it. Just kind of a little flag, again, like all stocks. This one's formed a nice cup. The handle, again, 11%. The handle's a little deep. You can see it's almost getting closer to the bottom of the base. It really should be almost just coming up to about there. So again, we're getting, because of the market volatility, we're getting these big handles here. But it's a strong stock. It's looking really pretty good. So we will, so just watch that one, even though it is in the buy zone. The last one we have is Humana. Now this one, one second, let me move my thing over there. So this one also just entered the buy zone, which you can see here in the blue. A little bit, again, it's just pretty choppy trading and not really giving us a lot of low risk entry points. In fact, we really don't have any. Maybe here, but the market was really pretty dicey going on. So again, we're watching this. We do like this. Look at this RS line, just comes screaming higher. It's outperforming, very good ratings, strong earnings. It's just one of quite a few stocks in this medical managed care area. So it is in the buy zone, so it is buyable. A little bit better looking than the other one because we did add a little bit more of a pause here. But you can see we are getting still some volatility here. So not ideal, but that's what we're giving. We're also got this stock on our long-term outperformer ready list. Let's take a look at this, the long-term monthly chart. And again, this is what we're kind of looking for. We just, a nice smooth uptrend. Of course, you're going to get some blips that would, of course, probably kicked you out, but that's the coronavirus crash. We're getting, though, except for that, in fact, we did get support because it just dipped down, came back. This is getting a lot of support at the 40-month line. You can see since the stock really took off, let's see, back in 2009, it never closed below this line the whole way. Now we're how many years? 13 years. So this is what we look for these long-term outperformers. So it is viable here for that, but we sometimes like to buy them more at the pullbacks to moving averages. But again, for the long term, it is, there's a weekly. We do like this too. You can see it's kept getting resistance right at this about 470 or so price. That's where the sellers have been lurking, 473. And we finally broke out of this pattern going back a year. And strong RS. So a nice breakout. So this is something if the market continues, we might pick this up for our long-term portfolio also. So let's go over to our watch list. We added a few new ones. The first one is McKesson. They're kind of medical wholesale drug supplier. Let's go to the daily. Now this one's got a pretty nice looking sort of, we're in the base, and we have a nice little consolidation we're forming here. So, and we're right at the top, right below the buy, which is at 330.20. So it'll be right above this. So, and this is something we'll be looking. We don't want to add a ton of exposure. We do have 1/2, but we may add another 1/2 if the market continues acting pretty well. We're very close, but look at this RS line. It's just screaming higher. And look here, this is the S&P. So you can see it's just almost completely inverse. The S&P has been dropping over and over and over, and this has just been going up the whole time. In fact, you can see, look at this divergence. This is what you're looking for future leaders. Great earnings, just consistent earning, very good overall ratings. Earnings and sales, well, it's a pretty established company. Let's look at the, it's a $47 billion company, so it's a large cap, but strong earnings and sales for an established leader like that. So really, this company is doing real well. Here is the weekly. Look at this line, just screaming higher that's fantastic. So you can see just, if you're looking for certain things, of course we didn't know that this bear market was going to turn into what it did. But you can just see here, this just broke out as the whole market started declining. Now, in terms of a long-term leader, it may be turning into one now. But we did have a long tier. We've got about 6 years of just kind of declining performance. So it hasn't had all the characteristics that we look for. But it may be turning into one, so we might end up putting that on our list. So that's a strong contender. It's the highest RS we have of all the companies, so that would probably be our first one to look at to add to our position. Kinsale Capital is the next one. Ticker is KNSL. This one had a nice, strong, big breakout on Friday, but it kind of ended up in the middle of its range. You can see it got resistance over here. Now, this is something we again would like to see, that the stock kind of just hovers around here with dropping volume, because we're back to, let's see if I can do it this way again on this chart. No, why can't I do that? One second. There we go. Okay. So you can see, if we kind of go back over here, it's a little bit covered over here, but you can see we sort of came up to this level. That's where the sellers have been lurking, roughly 240, 242. Here it hit it, big sell-off, came back up, hit it, tried again, sold off, tried again, sold off. So you can tell this is where profit takers and other people are waiting to get out. So and again, nothing changed. Friday hit that and pulled back. So we want to see if we can just, maybe it'll dip down, maybe another shakeout, and then we would have another little tiny base, might take maybe 3, 4, 5 days. But even a nice shakeout, as I said before, to show that we got rid of a few more sellers. And the fact that we're now floating up here for a long time may mean that we're ready to just blast off. Now, one thing I want to point out too is we also look for less volatility. So on the left side of this base, we have a pretty big drop. It came up, came down, but notice that this low is higher than this low. So we have a larger drop here. Let's see if I can draw it with this. So we have, this decline, then we have a smaller decline, and then we had even a little bit smaller decline, and then we had this one was even smaller. Now, this may have been the final sort of contraction that we look for, less volatility going on. But, it didn't quite break out, so we don't know. So ideally, we even get another one that's even tighter there, and that gives us the buy point. And you'll see this happen over and over on true leaders. Again, great RS. There's a lot going on in these companies. Again, look at the S&P declining. Look at this stock. Now, it's not been as strong as the other one, but every time as the S&P has been coming down, this keeps trying to bang upon new highs. Let's look at if that is the all-time high. No, we're not quite, but this is a year and a half ago, but we've been banging up around this here. So, and let's look at the monthly. Yes, we're pretty close to all-time highs in this stock, which has made a fabulous run since 2016. So, looks good. So that's on our list. We only have a few more. Next one is Cigna. The rest of these are all healthcare, which has been a strong contender here. Again, it's a little volatile. I mean, we just have a lot of volatility going on. Really nowhere to buy it yet. Just looking back here, you could see, again, a big run up, came down, let's get the little tool here. So we had a move there, and we had a less move here, and then we even had a lesser one here, and it kind of tightened up here, volume was low, and then it broke out. Now this, of course, we're in a bear market, it didn't quite do a lot, it came back down to the buy zone, but you would have had a nice, it looks like a good 10% run. Could have made a little bit of money on this. But these are the things we look for. In a bear market, it just makes it choppy. And then look what's happened though. It's gotten more volatile. This is now larger than that drop. So it's looking decent, but it's not ready to buy. Let's look at United Health. I think this one's a little bit better. A little bit. Now we've just formed another big base, and we're in the middle of forming the cup. So we do have a possible buy zone here about 518. If I draw the line here. Yeah, so we're right about there, breaking out of this. It's a little bit riskier because, here, let's draw a line here. Sorry, let me get rid of that line so I can draw it. These charts, they don't have the greatest tools for for drawing stuff like this. That's close enough. So you can see if it does manage to get above here, you still have all this overhead supply sitting over here. So as it runs up into there, these people are potential sellers that are looking to get their money back. So again, we always try to, if we can, this is the first one of the first areas you can get in. And then if it gets up here and manages to break out, you could add to the position. But it's a little less likely it's going to work just because you already have trapped buyers that are just from May, so it's recent. So they may just be hoping to get out. And the last one is Centene. Again, this is forming a little double bottom, a W base. Nice RS. We got the blue dot. We like that. But again, we're coming right up into this resistance up here. Every time it's gotten up to around 87 or so, we're hitting sellers. Again, I talk about it all the time. We want to see if we can just kind of get up to about 87 and, for 3-4 days and just not have any sellers appear. That may mean that these people have been worn out and are gone. Again, nice, decent sales and earnings, a little erratic. Annual earnings are looking pretty good. It's just a nice slow grower. These companies, they make a ton of money, unfortunately. As we know, as consumers, we're paying more and more for our health care, but these companies are making billions in profits. And again, just like the other ones, they're all large caps. Let's look at a weekly briefly. Look at this RS, totally outperforming the general market. And the monthly, it's not bad in terms of a long-term outperformer, but we're not getting, it's a little bit slower grower. So it doesn't quite have all the characteristics. We have one more stock, and that is Excel Service. Ticker is EXLS. And this is in our long-term outperformer watch list. So let's start with the monthly. So again, this is a nice, we also have some volatility, but this has been a nice, slow but sure grower. It's an outsourcing firm. Let's go back to the weekly here. Let me go back to point out one more thing. Yeah, nice outperformance versus the S&P. We always want to see that. Here, same thing on the weekly. It's been doing very nicely. RS is making a new high before the stock. It breaks out of the base. We like that. Nice divergence with the S&P. Real strong. Earnings and sales have been pretty good overall. Composite is 97 out of 99. You can see it's starting to break out though, which we like too. It kind of had a bunch of 4 years of just earning in the $2 range, and then threes, and now we're jumping up to 6 next year. So all looks pretty good. We go to the daily. This is on the watch list because again we're getting that same, a lot of volatility and a false breakout. So at first we looked like we were doing pretty good. We had this first wave, then a smaller one, and then it sort of just kind of broke out again. We've been seeing, and then of course it failed. So we want to see if it can tighten up again here and give us a new buy point. So on our list, we don't have any buy point listed yet, but you can be watching for that. So you can see we're always looking for the same things: outperformance versus the market. Most of our stocks have RSs of 95 or more, so they're already telling you they're leaders. And now we're just looking for low risk entry points for these stocks. Now some of them have been leaders for a while. They're already names, but stocks like this, most people have never heard of it. So it could turn to be a nice winner. It's already made a pretty big move, but not overextended. I mean, you can see coronavirus crash, it was in the 60s. It's done more than a double, but it hasn't gone up hundreds and hundreds of percents. And a lot of times, though, these stocks can go up thousands of percent. So it may just be, this could be a leader going forward, but we'll see. So that's about it for this week. I hope you have a great 4th of July weekend, and we'll be back next week. Okay, thanks.